I'm Keith Knapp. I'm going to be taking you on this fantastic journey of helping you to prepare for a down economy. Not to be all doom and gloom on this episode, but we are going to dive into making sure your business is ready for whatever the economy throws at you. So as you guys are joining me, just jump in the chat. Let me know where you're from. Give me a like. Give me a thumbs up. Tell me about your business and what you do for a living. And before we jump into this, we just wrapped up our Funding 50 challenge, which was amazing. Tons of people there, a lot of great speakers, a lot of great opportunities for people finding money. It was really cool. And we have another one coming up. If you like helping people find money, if you like working with business owners and you want to learn how you can sell money, join the Business Loan Broker Challenge. You can check it out at businessloanbrokerchallenge.com. You can scan the QR code right there, and it's going to take you to the landing page, show you exactly what we're doing, how it all works, what's included, and lots of cool stuff. So make sure to check that out. It's at businessloanbrokerchallenge.com, where you can scan the QR code and get started. All right, let's jump in today's training. So let's talk about preparing for a down economy. Look, let's have an honest conversation. Let's leave all politics and everything aside. At the end of the day, we live in a society that goes through a lot of ups and downs. We live in an economic system that can very quickly have a downturn, like we saw with COVID, like we've seen with the mortgage crisis, like we've seen just time and time again. Things just change almost instantly. I mean, right now we've got inflation that's still creeping up on us. We've got real estate, the real estate market starting to get volatile. Property values are spiking and then dropping back down and leaving people upside down. Job market's gotten aggressive again. Like I know Credit Suite, we've been hiring, and we had just triple, even quadruple the amount of applicants than we had before. So it's job market's getting more aggressive. We still have banks collapsing, being bought out and changing. I mean, the economy is what it is. I mean, it's something that we're always going to have to deal with, something we always have to be prepared for. So let's talk about how you can set up your business to do it. What are you going to do? What steps can you start taking right now to make sure that your company is prepared for whatever may happen? So the first thing that we're going to talk about is leveraging your business credit to be able to prepare for a down economy. Now, look, if this is your first time hanging out with me here at Credit Suite, you know that I'm just going to warn you, we love business credit. We love talking about it. Love showing you all the ways that you can use it, how you can leverage it to really grow your business without a personal guarantee, to improve your loan chances. But I think as we start to see changes in the economy, as we start to see shifts, and as we start to see movements, understanding how you can really use business credit to leverage your growth becomes even more critical than ever. So the thing that I love about business credit is that a lot of times, you know, we hear credit and immediately we start thinking, I can get a lump sum of money. But as a smaller business, as a business who's up and growing, or maybe a business who's doing, you know, $2-3 million a year annually, but you haven't built your business credit, it's a bit of a process to get there. But the thing that I love about business credit is that even as you're going through the building process, you can still use it to leverage the growth of your business. So, for example, business credit's the perfect tool for getting the resources that you need. So if you're running a retail store, you can get inventory. If you're running a trucking business, you can get vehicles, you can get fuel, you can get maintenance, you can get all sorts of stuff with it. Business credit gives you the ability to get the resources that you need right now without spending cash out of your bank account. Then you're able to turn around, use it on your products or use it on your services to be able to get a return on your investment, then turn around and pay off your business credit line and have your profit left over from it. It's a brilliant way to run a business, and it's not that it's going to improve your cash flow, for one, because you don't have money constantly coming out of your account. But the other side of it is that it gives you that peace of mind knowing that even if your reserve cash or your cash to buy inventory isn't as high as it should be, that you know that if you have a hot selling item, or if you've got demand for a product, if you've got demand for your services, that leveraging that business credit is going to get you what you need to make the money, so you can turn around and then pay off your credit lines. And which is going to be beautiful, one, because you're making profit, you're making money off of your credit, which is the name of the game. but the other side is it's going to help you build your business credit scores. It's going to open up more funding opportunities. It's going to give you better rates and terms as you start looking at some of the different financing options. So the first thing I'm going to tell you is that if you're getting prepared for a down economy, all financing is good financing if you know how to use it. So start looking at your business credit, start figuring out, how can you really leverage business credit to take your business to the next level? What steps can you be doing? What can you be doing right now that can prepare you that if you have, 100, 150, $200,000 in business credit, can offset any economic turns that would happen. So that's the first thing. Business credit, always focus on your business credit. It's not just for what you get right now, but it's got a long-term benefit. It's got value for you for wherever you're going. The next thing that you want to focus on is stacking your financing. Now, Ty's talked about this a couple times. I've talked about it a little bit, but stacking your financing is a great tactic as you're preparing to go into a down economy. The reason that I love finance stacking and the reason that I think this is so valuable for you is, one, you're able to get the money that you can right now, and you're able to stack it with other types of financing. So, for example, you're not just going to go to a bank and say, "Hey, I need $1 million worth of credit, or I need $1 million worth of a business loan." But really, what you're doing is you're saying, "Hey, I'm going to be sitting or." Sorry, I'm reading your comments and they're throwing me off here. So what you're going to be doing is you're going to be looking at it going, okay, you know what? I can get approved for a merchant cash advance over here. I can get merchant revenue financing here. I may have some secured financing that I can get with this piece of equipment or this asset that I have available. And then you're collecting all of that, and then you're saving it for when you really need it. Now, the value of this is that if you're a newer business, you may look at financing and go, I need $1 million right now to be able to get my dream up and going. If you're new and let's say you're only making $10,000 a month, a bank's not going to look at you and go, well, congratulations, you're making $120,000 a year. Let's give you $1 million. No, they're going to look at it and go, based off of the revenue that you're running, you're not going to qualify for that amount. Using a strategy like stacking your financing is going to give you the opportunity to collect as much money as you can, hold it into an account, and then have it there when you need it. And financing stacking is something that only works in good economic times, because as things start to tighten up, banks start to tighten up. And as banks start to tighten up, your ability to get money just based off of your reserves, based off your assets, based off your income, all of the different types of alternative financing starts to dry up over time. So you want to be very cautious, or you want to be very mindful of when you're applying for this, and you want to be smart about it. The other thing is that getting access to the money that you need is going to save you a ton of headaches. But at the end of the day, you want to be careful about it. You don't want to just go out and go, oh, I can get this financing with 25%. They're taking 25% of the funds, but I have money, and then you're doing that again. You can become upside down if you're not being mindful about it. So what we're going to do is we're going to explore some of your different financing options, talk about how this could work in your financing stack, what you can do with it, and some tactics with it. And at the end of the day, when you start operating under a funded business opposed to one that's constantly looking for money, your perception on everything changes. Your mindset about marketing, your mindset about growth really starts to turn around when you look at your scenario and you realize that you've got reserves there, you've got money there. It really changes the dynamic of how you're functioning. So let's talk about your finance stacking strategies. The best option is always going to be looking for the loans that have low interest and fees. These can be loans such as like the credit line hybrid, secured financing options. So for secured financing options, well, let's explain the products a little bit. I'm going to take a step back here. So with like the credit line hybrid program, it's credit card stacking. So basically, you're stacking business credit lines and business lines of credit at one time to be able to qualify for more. Now, during the Funding 50 challenge, we actually had a lot of questions around this about, why can't I just go out and apply for multiple credit cards at the same time? The answer is you can, But getting approved for multiple credit cards at the same time isn't as easy as you think, because as you start applying for credit cards, and as you start applying for business credit lines, the banks are putting inquiries on your personal credit. They're putting inquiries on your business credit as well, meaning that as credit cards start to look and come in, or as they start to come in and they start looking at your options, they start looking at giving you money, they're going to see that you've been trying to take out additional loans, and you'll very quickly get turned down for that. So something like business credit line stacking is highly effective, because when you work with the right companies, you know who's going to be able to approve you based off what credit reports they report to, what bureaus they're checking for your approvals, and submitting them all at the same time with the exact same information gives it a structure that banks are going to like, and they're going to approve you for. So the credit line hybrid is a great option, and the thing I like about it is 0% interest for the first for up to 18 months. So even if you don't use it, having those credit lines available is going to go a long way, and it's going to leave you open for using it when you need it. All right, the next option that we want to look at when you're putting together your finance stack is secured financing. With secured financing, it's just like what it sounds. It's like buying a car. It's like buying a house. You're using the actual asset as collateral to secure the loan, meaning that let's say you have a stock portfolio that you would like to leverage for a lot of credit for your business. That stock portfolio is still going to be earning gains on it. But if you default on your business loan that's securing it, they're going to take those stocks and they're going to liquidate them and take their money back. So it's a safe investment for the banks, meaning that they don't need to charge you as high of an interest rate. They don't need to charge you as many fees, because the charge-off percentage is usually considerably lower. And if it does get to a charge-off status, the money that they loaned you can be recovered. So banks love secured financing, and it's a great tool to be able to put in your stack. Now, what can you use for secured financing? There's a big list of stuff that you can use. You've got stocks, you've got bonds, you've got mutual funds, you've got retirement accounts, like the 401k ROBS program. You've got IRAs that can be used to secure financing. You can even use cryptocurrency for financing. This is a question that we had come up last week, that Ty and I both started digging into. There are options for getting business credit lines and business credit loans with crypto, and most of the time they're secured on the platform. And so, like, the way I view it is kind of almost kind of in a function the same way that PayPal works. You use their platform, you're running money through their platform. They're willing to give you a loan based on the amount of money that you're running through their platform. A lot of the cryptocurrencies are starting to roll out with this as well. So your crypto still appreciates in value, but you're securing a business loan based off of that investment that you have there. Some of the other options that you can look at for financing. So we've got the credit line hybrid. We've got secured financing options. You've even got SBA loans. SBA loans, they've got like microfinancing that you can get approved for up to $50,000. Very, very light requirements on that when it comes to income, when it comes to assets. If you can qualify, if you've been in business long enough and you've got the revenue and you've got the assets there, even looking at a bigger SBA loan could be helpful. So if you're looking like a 7A loan, something like that, where you could be looking at the hundreds of thousands or millions of dollars, that's a great option to have. One of the other options that most people don't talk about is if you have equipment, if you've got company vehicles, if you have real estate. Obviously real estate's going to always something that you can use to secure a loan. But using equipment is also another great way to be able to secure financing, and not just for purchasing equipment. If you use a program like an equipment leaseback, the way that it works is, let's say you've got a bulldozer that's worth, let's say it's worth $100,000. And it's paid off. You've got that $100,000 piece of equipment sitting there. What happens is the bank comes in and they appraise it and they go, okay, yeah, you're right, it is worth $100,000. We're going to give you $90,000 loan against this piece of equipment, and then you're just going to pay us back like you're making a payment on the equipment. Now, the reason that I think this is brilliant is because this opens up a lot of flexibility. It opens up a lot of creative ways to look at positioning your funding. So let's say you have a piece of equipment that you're able to leverage, or you've got stocks that you're able to leverage, and you want to start moving some of your money into commercial real estate. Taking out a secured line of credit or a secured loan or an equipment lease back against that asset that you have having manageable payments makes it where you now have a down payment that you can secure real estate, and you can get loans for the rest of the money. So when you're looking at stacking your financing, the name of the game is to be as creative as you possibly can, to look at how can you leverage other people's money to get the most amount of money, to get the most funding and financing that you need to be able to get to your business. Now, with the financing stacking strategy, the reason that this is so valuable to you while you're looking at preparing for a down economy is that you don't necessarily need to spend all your money at one time. I've seen this before. I've done this before. You get $100,000, you get a nice good loan, you feel great. The world starts to change a little bit of a different color. You start seeing all these opportunities, and you're going to look up in 6 months, and like if you're running $1 million business, $100,000 is going to go away really fast. You have to be prepared for what you're going to do with that money. So the best piece of advice that I've ever heard Ty talk about was this financing stacking strategy. If you can get money now, get the money that you need, put it into account, save it, have it there for when an unbeatable opportunity comes up. I think that a lot of times, what we find that the reason that we find people have a hard time getting the money that they need is because they wait until they actually need it to start applying. So here's a little secret that bankers will never tell you. A bank doesn't want to loan money to somebody who needs it. They want to loan money to somebody who wants it. And the difference of it is somebody who needs it isn't going to be as financially stable as somebody who wants it. For example, if you need $100,000 to keep your business going, that $100,000 isn't necessarily going to give you the best return on investment, because if your business is currently in a position where it's upside down, your finances aren't flowing the right way, you've got negative cash flow, that $100,000 is only going to sustain where you're currently at. Opposed to if you go to the bank, you show them you've got good cash flow, you've got good revenue, everything looks great. As you get that $100,000 loan, now you're able to use it in such a way that you're augmenting what you currently have going on, and you're able to invest it to get a bigger return, to get a bigger ROI based off of your money, based off your revenue of what you're doing. So creatively looking at your financing options is a huge way to really leverage what you have going on, to be able to get the most out of your money for what you're doing. So now let's talk about a couple other hidden gems that we don't talk about a whole lot, but I just think are fun, because the fact we don't get to talk about them. So one of the other hot buttons that we discussed during the Funding 50 challenge was peer-to-peer funding. Peer-to-peer funding is, if you think of like GoFundMe, places like that, that's more on a fundraising side. But when you're looking at peer-to-peer financing, there's a lot of really neat things that you can do. Peer-to-peer financing means instead of going to one investor, like an angel investor, and going, hey, I need $500,000, get my business up and going, here's my expansion plans. What you're doing is you may be going to 1,000 people going, hey, I need $500 to be able to get this up and going. And now the power behind this is with peer-to-peer funding, you're able to give each person a little bit of a return. They're going to be happy. They're making a micro investment into your business. So it's a lot easier to come up with that money and not give up control of your company, not have one partner has a massive financial investment who may try to come in and tell you how everything's done. But they're going to with that micro lending, you're going to be able to still have creative control, have everything that you need for it. Now, when you're looking at this model, there's a couple different ways that you can structure this. I've seen businesses who have gone out and they've put together a very creative initial offering. So, like with what I do in marketing and social media, I work a lot with tech. I do a lot with software, and I'm always looking for new software that's up and coming. And this has been super easy with the AI bubble that we just entered into. But watching all these companies grow, I've seen some people do some really neat things, like taking their product and offering an advanced version of it and putting them kind of in an alpha testing program just for their funding investment. So, and this is a great way. So let's say you're building out a CRM and you go, hey, you know what? I've got this cool feature. It's going to help out businesses, yada, yada, yada. If you invest, I'm going to give you early adopters access, meaning that you're going to get first come, first serve on anything. You're going to have top voice on what's being said, or what we're producing. We're going to give you more of a say, more influence over what's happening with the company. You're going to find that a lot of people who are willing to invest money into something like this are going to love that opportunity to really have a say in what's going on in the business. So as you're looking at some of these options, instead of just putting it together going, well, I got a great product, people should buy from me. People aren't always going to buy from you just because you have a great product, especially if it's a common product. Like if you're running an insurance agency, or if you're doing something like credit repair, or something along those lines that are pretty common practices or pretty common business models. Having different unique value propositions, having different things that you can add to it, and different ways to be able to disrupt the market and then be able to bring your peer-to-peer investors into it. It's a great way to get that money. Now, one of the other things that I've seen that I think is a brilliant idea, and this is a proven strategy. I can't say I'm the mastermind who came up with this. I'm just the guy who saw it and knew it was a great idea. But using peer-to-peer investing and using lending platforms to purchase real estate is another really creative way. And this is fun because basically what you're doing is you're going out and creating a mock LLC, not even a mock LLC, but it's more of like a temporary LLC where you may take 4 or 5 different investors. They may invest a larger amount. So let's say they want to get $20,000. They all want to get $25,000. Now you've got $100,000 in liquidity inside of this LLC. You can use that as a down payment. You can use that as reserves. You can use that however the bank wants you to use it to be able to get a loan to fix and flip a property. You turn around, you do the work, you sell it in 3 to 4 months, and now you've got a return on investment that you can pay out all your investors, and you can choose to do it again with them if they all want to. You can close down the LLC. You can keep the partners engaged and bring them into other ventures, other things that you're doing. But it's a really smart way to look at your business, look at funding your business with other people's money, get them a return, get them what they're looking for, but you still have the opportunity to leverage your expertise, to leverage your services to be able to get the most out of it. So what to keep in mind while you're going through all this, and as we I'm going to be the first person to tell you, I hope we don't have to go through another recession. I hope we don't have to go through a down market, a down economy, but more than likely we are at some point, and it's just the name of the game, but that's okay. So here's some of the golden rules and dominating in a down economy. The first thing to understand is no matter how amazing business credit, business financing is, cash is still king. Stockpile as much cash as you can. Start a business savings account. Start investing. Start working on building your assets is the next thing. When you start having cash and you start realizing, you know what, I've got 3 months of reserves, and now I've got more reserves. What do I need to do? Start investing this into your stocks, your bonds, your mutual funds, your cryptocurrency. Start taking the money that you're using to create assets, to create more income producing and revenue producing investments for your business. The other thing that you can look at to be able to stockpile cash is savings. Look at what expenses can you cut. What can I automate? What can I use AI for? And some of another way of looking at that is maybe instead of savings, maybe you start looking at price increases. If you increase your price, maybe not your primary price. Are there other things that you can increase your bottom line on? Are there other ways that you can make each of your products more profitable? Offer new services. By the way, if you're in the B2B space, this is a great chance with the Business Loan Broker Challenge coming up. This is a great opportunity to add that as a secondary service if you're offering B2B services. Just be creative. Think of different ways that you can do it. The more flexible that you can stay in running your business, the more flexible you can stay on your offerings, what you're doing, the more that you experiment, the more that you get out there and you try different things, the more opportunities you have for growth. So like as we start seeing signs of the economy tightening up and getting worse, this is the prime time for entrepreneurs. This is when we shine, is when things go bad. So what was it that Warren Buffett said? When there's blood in the streets, it's time to buy. This is the time to start preparing for that opportunity. having the funds, stacking your funding, having your business credit ready, having all of your fundability ready so that you can get financing for when these types of events start to take place is going to put you in a world of opportunity as the market starts to shift. So all right, that's all my main points for today. If you guys need help with any of your financing, if you need help putting together a strategy for stacking your funding, get a hold of us. We'd love to help. You can reach us at creditsuite.com/consult. You can schedule a free business financing assessment with us. You can scan the QR code right there, and get you access to it. We'd love to help you out, talk with you, see where your business credit is at, and then we'll also look at your fundability and see if there's things that you can start improving right now to open up more opportunities for better money for you. So look forward to talking with you again. If you need our help, reach out. It's at creditsuite.com. You can also give us a call at 877-600-2487. Again, 877-600-2487. Hope you guys have an amazing day. Happy 4th of July. A little bit late, but hope you guys had a great 4th of July, and we will see you next time.